So have we bottomed?
Well, we think we might be getting close to that bottom. What the market is looking for, what the industry needs, is for supply growth to slow enough to allow demand to absorb the excess that we've got right now.
You were saying earlier that the nature of any commodity is that it has to overshoot before it finds some kind of equilibrium. How much did we overshoot by?
Well, you'd normally overshoot by, you'd sort of say directionally maybe 10, 20, maybe 30%.
30%.
And then you have to be down at that lower level long enough to get the signal into the market that the change in behavior, that producers and consumers get that change in behavior.
This is something you've been writing about for Wood Mackenzie. What is the nature of the demand that we're seeing coming out of China, for example, for oil?
Well, what we're seeing is a bit of a slowdown, and part of that is driven by the nature of the economy being a bit slower. But China's also going through a transition of going from a manufacturing economy to a service economy, and that's just a less energy-intense economy to be in.
Wood Mackenzie writes such interesting research. You write much more about the operational aspects of oil. When you hear the media or the economic or the finance coverage of hydrocarbons over the last tumultuous, 12 weeks or so,
Longer.
How do you respond? I mean, you guys are on the inside. How do you respond to all the ventilation about 50% down?
I think what we do is we try to focus on those two things. Is getting the market to balance doesn't mean you have to have production cuts. What it means is that you have to have production slow.
I think OPEC said that.
Right.
Yeah.
And so what you need is demand to grow faster than supply. So you don't need to have the absolute numbers change. And that's
The bottom line here is, to get calculus on us, it's a flow analysis. It's not an abrupt thing,
Right.
the certitude that I hear all the time. It's much more rates of change.
It's exactly right. I mean, the market is always searching for the next equilibrium. And so it's always in that flow analysis that kind of tells us, are we moving in the right direction to get the stock position ultimately where it needs to be, but not there. The stock position doesn't have to be there on any given day.
Briefly, Skip, long-term, do you see this changing behavior in the U.S., the long-term price of oil? We already know that Ford is closing its or shuttering its plants that make smaller automobiles.
Right. Well, one of the things we've seen is sort of a surge in gasoline demand in the fourth quarter for the U.S. And essentially the way that's being described anecdotally is that we're seeing people park their Priuses and drive their SUVs. Now, that's a one-time effect because once you've gone from a Prius to an SUV, you don't go to two SUVs. So we sort of see in 2015, yeah. But in 2015, we sort of see that growth moderating.
Quickly, does Keystone matter? I can't get a straight answer.
Keystone does matter, especially in this lower price environment, because the Canadian oil sands operation costs stay roughly fixed, but their realizations are coming down. What Keystone offers is a cheaper way to get to the end market of the U.S. Gulf Coast.
So Canada needs Keystone more than the United States?
Well, Canada needs Keystone more than the United States, but the Gulf Coast refiners are also really interested in getting that heavy crude.
All right, Skip York, excuse me. Thank you so much for joining us from Wood Mackenzie, typically in Houston, but here in New York for the morning.